Hello, I'm Michael Taila, Director of Fixed Income at City National Rochdale, and welcome to this month's edition of Fixed Income Perspectives. November delivered positive total returns for fixed income investors, reversing losses seen earlier in the year. The journey wasn't smooth, however. Election results initially drove yields higher as markets debated the potential impacts of new policies on economic growth, inflation, deficits, and interest rates. The U.S. 10-year Treasury tested 4.5%, a level last reached in May, before settling near 4.2% by month's end. Market sentiment shifted as investors adjusted to a second Trump presidency. The nomination of Scott Bessent as Treasury Secretary reassured markets, with his selection being viewed as a stabilizing influence in the administration. This contributed to lower yields by easing fears over uncertainty. November was a strong month for fixed income across the board. U.S. Treasuries posted a total return of 78 basis points, bringing year-to-date gains to just over 2%. Investment-grade corporate bonds also performed well, with total returns reaching approximately 4% for the year. Municipal bonds added to the positive momentum, delivering roughly 2.5% in year-to-date returns. High-yield bonds stood out as the top performer, with both taxable and tax-exempt sectors benefiting from a robust economy, below average default rates, and strong demand for income-generating assets. This resulted in over 8% returns so far this year. Now that the election is behind us, the Federal Reserve is in focus as its final meeting of 2024 approaches on December 18th. Markets are pricing a 70% chance of a 25 basis point rate cut, which would bring the federal funds rate to a range of 4.25% to 4.5%. Expectations for further cuts in 2025 have moderated, with markets now anticipating a slower pace of easing. Key upcoming data releases, including November payrolls and consumer price index data, will likely shape the Fed's outlook. October payrolls fell short of expectations, adding to the anticipation of these next economic reports. CNR expects the Fed to reduce rates by 25 basis points in December, with gradual easing through 2025. However, we maintain our higher for longer interest rate theme. We believe the U.S. 10-year Treasury will remain range-bound between 3.75% to 4.25%, offering an attractive opportunity for fixed income investors. As we close 2024, we wish everyone a wonderful holiday season. Thank you for tuning into this month's edition of Fixed Income Perspectives. See you next year.